very warm welcome to you as you join us on today's episode of Tax Matters. My name is Olumuyiwa Matuluko. How's have we been? Last episode, we had two guests in the house who came to discuss Petroleum Profit Tax Act, that is taxation of the oil and gas business sector in Nigeria. We had two gentlemen, Mr. Siwa Ekechi, the Deputy Director, Light Tax Office, Oil and Gas Servicing, and Mr. Albert Folorunso, a tax consultant. And we remember that we promised you that on this episode, we will bring you Mr. Ajayi Bamidele, the Director of the Light Tax Office, Oil and Gas at the FRS headquarters in Abuja. Mr. Bamidele is with us here today. You are welcome to Tax Matters, sir.
Thank you very much.
Yes, sir. Maybe we should begin from what we know is different from the past. That department, Light Tax Office, Oil and Gas, used to be just one single department. Now we understand that you have oil servicing, upstream and downstream as subdivisions. What exactly informed that reorganization and what impact has it had?
Thank you very much. In the course of FRS development and way to serve the taxpayers, which is our customers, better, we look at, okay, what are we not doing right and what are we doing best and how better can we improve? And it was considered that, okay, we have not actually been touching the life of most of our taxpayers, particularly in this industry. And if you reflect back to previous years, before we started having large taxpayer department and small and micro, later we grow up to having the medium tax offices, which is just to segment our taxpayers so that we can, as much as possible, touch individual taxpayers and serve them better. It is on this background that we said, okay, let's look at this department, which is one office department before, and that if we now look at it from that of way of touching them more and then serving them adequately, we said, okay, let's look how many offices can we create from this department. We look at the composition of the industry itself. What is the makeup of that industry? It's made up of upstream, downstream, and service. And it was on that basis that we said, okay, if we bring out upstream out of this office, we'll be able to deal with them because of their own peculiarities. We'll be able to deal with them and serve them and do most of the things that we require and develop skill to serve them better. It was on this note that we now started saying, and at the end of the day, management agreed that, okay, let's have the offices taking a different autonomy, having their own task controller, having all the required to become a complete office. And becoming a complete office simply means that all the different units, particularly the 6 units that make an office, are now put in place in each of these offices. And the offices are not limited to these 3 offices. We know that in Port Harcourt, most of the companies that are in the large taxpayer offices in Port Harcourt render one service or the other to the oil industry. And it was on that ground that management also approved that oil and gas should be LTO, Oil and Gas Office in Port Harcourt, which means the offices under the department are 4. We have the upstream, we have the downstream, which is in charge of all the upstream activities, and then we have the oil servicing companies, and we have Port Harcourt Oil and Gas Office.
Okay. You spoke about peculiarities. What are those peculiarities? What distinguishes an upstream operator from a downstream operator or from a servicing operator?
Now, for upstream operators, if you look at the companies that are in upstream, they are the one who goes into exploitation and exploration. They are the one who produces the oil and lift and transport the oil. But for the downstream is the one who is putting all some of these products into finished and usable form. like oil marketers now sell and dispense through the pumps. We have the refinery who refines the products. We have the petrochemicals and so many other ones. They come under the oil marketing, which is downstream. Now, the servicing are those people who render one service to or the other to the oil stream itself, particularly. It ranges from catering service to drilling service. And if you look at the upstream itself is making use of all these services to produce its own product. It will use those who drill, that is, who use rigs to drill, like the Schlumberger and some other servicing companies in the upstream. And also, they need some aircraft. We also have some other services. All the type of services are contracted in one way or the other. And those who render those services are called the oil servicing companies.
Now, if what I pay is petroleum profit tax, in what currency or currencies do we pay?
The Act is very specific in it. It says the tax will be paid in the currency of transaction. And if you look at the Act, it's clearly that the upstream, they are petrodollar income. And since it is in petrodollar, then they pay in dollar. However, there are still few activities that are carried on, which is part of their, we won't say those are income that are from upstream on crude. Like if you earn income in Naira, interest income, those are other incomes, and they will come under company income tax.
Okay.
They will not come under PPT.
Okay.
Therefore, all such incomes suffer tax in the currency of transaction.
Okay. Okay. We'll go for a short break. When we come back, we'll still go back to that reorganization. We want to know what impact it has had on the bottom line, because as far as we are concerned, you are judged by what you collect.
Yes.
Don't go away.
Yeah, okay. Yeah. Wetin be this?
The deduction now for withholding tax.
Withholding guinea. Look, if una no pay me my correct money today, hey, munu get meju hand for.
But madam, should be your company paying income tax.
Yes, that one na enough load for me to carry. Why una wan come add join am again?
You see, withholding tax now advance payment for income tax. So when you do some kind job like contract, we go remove small from am when we won't pay you.
And una go contract am up. No. Abeg tell me another.
No. We must pay the money to FIRS within 30 days, and they go give us withholding tax credit note to take show say you don't pay part of your income tax in advance.
So?
Now to help make the money where you go pay at the end of the year small.
So this withholding tax something, it be like part payment of no.
Exactly, madam.
I beg you, give me my check.
Remember, come collect your credit note.
Withholding tax, now for we own good. FIRS, it pays to pay your tax.
Welcome back. You are still watching Tax Matters, and we have a guest in the house, in the person of Mr. A.J. Bamidele, the Director, Large Tax Office, Oil and Gas at the FIRS headquarters in Abuja. Mr. Bamidele, we were talking about the reorganization that gave birth to 3 subdivisions: servicing, upstream, downstream. What impact has it had on your operations? And we are not missing words here. On collection, that's the bottom line. Has it impacted positively on tax collection?
Thank you very much. This sector, this department accounts for about between 75 and 80% of what FRS as a whole reports. And over the years, you can see the continuous improvement in the collection from the FIRS. And that has been because the department is performing. And performance is not something that comes on its own. Before the offices were separated, before offices were created out of the department, it was difficult for us to audit most of the oil companies up to date. And we have a lot of backlog of audit. But because the offices were created and all the units were created, replicated in all the offices, which means we have more officers to address fewer cases. And as a result of that, some of these cases that were not actually being attended, that had not been properly or adequately attended to in the past, and now more focus is being placed on them. That most of the companies are now feeling the impact of the separation. That they acknowledge. Recently, we had the meeting with oil producers traders section, the task section of it, and they acknowledge that, oh yes, we are feeling it better than it used to be. The withholding tax that, we had problem in collecting our withholding tax credit notes, they acknowledge that, oh yes, there had been a significant improvement in respect of this, and which means there will be more revenue that will be coming in as we follow up with the collection of withholding tax and VAT. And since they are getting the required support from FRS, giving them their receipts as at when due, then they will be willing to discharge their own responsibilities as at the time they are required.
We are conducting this interview on the sidelines of an interagency retreat, the 2013 edition of an interagency retreat, which involves you and NNPC and some other players. Would you want to tell us which agencies are involved in this retreat?
Now, government sometimes in the years past, back to 1986 or thereabout, realized the need for the agency that are having issues with revenue to start to meet. And the chairmanship of that agency was placed at FRS. And on that basis, the agencies meet on monthly basis. And who are these agencies? Federal Inland Revenue Service, NNPC. Under the NNPC, we have two sections of NNPC. We have the NAPIMS and we have the COMD, which are the two sections from NNPC. We also have the Central Bank of Nigeria and DPR. All these agencies are involved in the collection of petroleum profit tax and royalty.
Now, that brings us to another question, and still talking about relationships. As tax collector, what is your relationship with the NNPC? Somebody said you are sisters, you are brothers. NNPC is owned by government, FRS is owned by government. Do you tax NNPC? Do you collect taxes from NNPC?
The question, do we collect taxes from NNPC, I would say yes and no. No, to the essence that far back to 1996 or thereabout, government decided that all the revenue of NNPC should go to Federation account and they should have appropriation for their own budget. Before that time, they were rendering returns to FIRS and FRS were collecting. Therefore, on PPT today, we don't collect money because all their payments go straight to Federation account. However, in respect of the modified carried agreement and PSC, production sharing contract, our modified carried agreement is another funding arrangement and for certain projects. These projects are being monitored by NNPC. And on monthly basis, there are returns that are made on that project saying this is the revenue that is accruing when the project starts producing. And payments are made on that basis. It is NNPC who anchors the arrangement. And then when the payments are to be made, they are the ones to sign off on the payments. Therefore, that's why I said it's yes and no. They are not paying on their own, but they are paying on behalf of the arrangement. Similarly, in respect of a production sharing contract also, the payment by law, it says the payment should be on the contract area basis, which means it's the contract area that is paying. and is the owner of the concession that is to effect the payment. NNPC, on behalf of government, is the owner of the concession. He pays on behalf of himself and on behalf of the operators. That's the type of payments that come from them. Beyond that one, NNPC is a taxpayer to the extent they enjoy services. And that comes under company income tax, like withholding tax and value-added tax. Then their employees also have to pay tax. Where they reside at Federal Capital Territory, then the employees there will pay as you earn.
That's true, that's true. In recent time, there has been talk about the petroleum industry bill. In actual fact, the petroleum profit tax that we are discussing now was submitted for an amendment, and later on, all the proposed amendments were collapsed into the PIB. What does government, or what do you intend to achieve with the PIB?
Well,
what are we to expect when the PIB has been passed?
FRS is a part of government, and PIB is a government bill, which means FRS, and if you look at the petroleum industry bill, is made up of two parts. We have the administration part, and we have the fiscal part. The fiscal part is looking at the tax. And that tax is also, there are issues that are being introduced there. And we are looking at two layers of tax system in the PIB. The first layer is the hydrocarbon tax, and then company income tax. The essence of hydrocarbon tax is that, okay, this is an hydrocarbon. And in that case, the principle is just taking it away from the concept that we are having today, that some of these contractors that are being argument, are they in the petroleum operations or not? That argument has been on over the period of time. But being defining and going into the PIB is now bringing in more than what we have presently into the tax net, to say that the PIB should cover beyond even those who we think they are in petroleum operation. It's now given a definition of who is into petroleum operation in Nigeria. And what do we intend to achieve? I said it's in two parts. We have the fiscal aspect and we have the administrative aspect of it. And on the administrative aspect of it, they have been clamoring for transparency in the industry, and that even the community should benefit more from what they are benefiting currently. All these are things that the bill is seeking to achieve at the end of the day. And on the physical aspect, if you look at the business of upstream, over the years, back to 1986, when the first MOU came into place and the subsequent MOUs, they were saying the MOU will be in existence, even though there will be some conditions that are precedent. There will be, MOU will continue to be in place until a new fiscal regime replaces it. And the new fiscal regime will either be, we pass another law, or we amend the existing law to say, okay, this one now supersede what we had initially. However, the MOU 2000 has been suspended, but in suspending it has not brought it to a closure until a new tax regime is in place. And by passing the PIB, then it will now mean that the MOU, Memorandum of Understanding, cease to exist. These are part of the things that the bill intends to achieve. And there are so many other things that are put in the bill so that it makes it easier to operate and remove all the ambiguities that were in the previous act.
You are a very busy man. Earlier today, you presented a paper at a workshop on transfer pricing. That is one concept that continues to crop up these days, especially when you're talking about international businesses, And we understand that the FRS released transfer pricing regulations last year in 2012. What exactly do you mean when you say transfer pricing?
Transfer pricing is a way one company releases goods or services or any transaction to a related party. And that related party in the regulation that has just been released is referred to as connected taxable person. But how did we start about this regulation, perhaps? Let me just give a little insight into it. Back all along in our various tax laws, be it company income tax, personal income tax, and petroleum profit tax, all of them, they have what we refer to artificial transaction in the law. But at the implementation of the artificial transaction, there is always a brick wall. The taxpayers will argue, oh, we don't have laws, we don't have regulations in place to explain this. This is the way we have understood it. This is our own implementation. And this has been on. And perhaps they are all right. Because in the decided case in Kenya, there was an argument that the Kenya Tax Authority took a company to court and say, oh, they have done something on transfer pricing. And the argument was that, oh, guys, look, do you have regulation in place? No. Then you cannot force the company to pay. And on this basis, FRS, having been a member of UN, United Nations, now said, okay, we attend meetings, and then the former chairman, Mrs. Omogui Okaro, was also a chairman of subcommittee then, and nominated some of us to attend. And it was on that basis that I represent Nigeria as a subcommittee of UN, who did the drafting of the practical manual for developing countries. And knowing what is happening on international basis, looking back into what we have in Nigeria, we now started saying, okay, there is a need for us in this country to have a regulation in this place. And being supported by the management of FRS, we started the process, and the end product is what was gazetted and signed out in August 2nd, 2012.
Okay, so now if there's any reason to go to court, Nigeria has its own regulations, and the operators agree that way.
Yes.
Ah.
If you see the space at which sensitization publications are coming in medias and all the major firms, auditing firms in this country have organized one sensitization program for their clients and invited the FRS to come and make its own presentation and make clarifications. Even the upstream, which is one of those, we had a presentation to them also. And good enough, all these sectors of the economy contributed to making this regulation, because it was made available to publicize widely at the time of development, and people contributed. And I will use this opportunity to thank every individual and corporate organizations that actually supported the development of the program, including the coordinating minister, who graciously approved the coordinating minister of economy.
Well, viewers, that has been Mr. A.J. Bamidele, the director in charge of the Light Tax Office, Oil and Gas at the Federal Inland Revenue Service. We've been looking at taxation of the oil and gas business sector in Nigeria. And in doing that, we've looked at many other matters, transfer pricing, advanced pricing agreement, and all that. We thank you most sincerely for watching. Let's do it again next week on this same station, same day of the week, same time of the day. Have a blessed week ahead.